Welcome to another exciting and inviting, informative and performative episode of the Entreprenudist Podcast, the place to hear real entrepreneurs and business owners bear it all. I am your host, life strategist and retirement planner, Randolph Love III. And if you have not heard, the third's the word. We have another great business owner to bring on the podcast today. But before we bring them up, I do want to remind you that this episode is brought to you by Shield Wolf Strongholds, a wealth growth and protection company. When it comes to estate planning, when it comes to life insurance, when it comes to employee benefits, when it comes to retirement planning, if your plan ain't Shield Wolf, your plan ain't strong. If you are a business owner that wants you and your employees to retire higher than you would have prior, make sure you visit shieldwolfstrong.com or call or text +1 904 822 4262. Now to our guests. Douglas Carpenter is an accounting and tax professional with more than 35 years of experience. He is a certified public accountant and chartered financial analyst. Douglas has accumulated a wealth of experience during his career that includes various accounting and consulting positions, including 5 years in the IT consulting division of Ernst and Young. He was chief financial officer for 12 years at a division of a 4.5 billion NYSE listed company. At this company, his responsibilities including complete financial management of the division, internal and external audit, oversight of tax filings, and SEC reporting. He founded, ran, and sold Strategic Asset Management, a hedge fund administration firm. This firm handled the back office accounting, reporting, and tax requirements for hedge fund clients. At one time, he was the youngest practicing stockbroker in the country, having passed the Series 7 while still in high school at the age of 17. Today, Douglas owns 2 accounting firms, Comprehensive Accounting Solutions and Precision Accounting and Consulting. Both firms offer full bookkeeping, accounting, and tax services with comprehensive focusing on the hospitality industry and precision offering services to all others. Douglas now specializes in the analysis and implementation of complex tax strategies, enabling his clients maximum tax savings. You don't play the radio, do you, Douglas? Welcome to the Entreprenudist Podcast.
Thank you very much for having me. I would like to I hope that with all that long introduction, I'm able to give a lot of value to your guests.
Oh yeah, I'm definitely hope so. I believe I know so. A lot of our listeners are business owners, investors, and people who can definitely use your insider advice. And you have been doing this for a long time. Is there nothing that you know now that you wish you knew when you first started?
Oh, there's a lot of things I wish I knew. It's and I see this in a lot of business owners. I've worked in my career in a lot of places, but owning a business is something that's very unique. One of the things is you can be the CEO of a company, but you're still taking out the garbage. That's kind of what the typical entrepreneur is doing. You have to do everything. And, the one thing that you understand in a business is that I go by is it may not be your fault, but it is your responsibility. Mm. And that's really what you bring to your clients. As you have employees and if they have a problem or they do something wrong, it's your mess. You have to clean it up. And that's probably one of the biggest things I would say to somebody starting out is to understand that owning a business is great. It's a freedom that like nothing else, but everything falls on you.
Oh yeah, you have to have extreme accountability, and you can ignore reality, but you cannot ignore the consequences of ignoring reality. And I know with the role that you play, a lot of times literally the buck stops with you. How did you know at 17 this was the industry that you wanted to be in? Or I don't know how old you was. I know you were in high school. How did you know in high school when you became one of the youngest people on the market. How did you know this is what you wanted to do?
I was selling stocks to my high school teachers. You know what? I've been investing since I was 10 years old. I was the only kid in the fourth grade who'd buy and read the Wall Street Journal every day. And so it's kind of a little bit of a different, different mindset, but I found it fascinating. To be honest with you, I really didn't stay in that career. I became a stockbroker. I hated it. I absolutely detested the lifestyle and the culture and everything else about it. And that's what actually directed me more towards accounting. And it was really in a choice of accounting or finance, but the way I felt it, or the way I saw it, was an accountant could go into finance, but a finance person really wasn't going to go back into accounting. So I wanted to kind of take in the right sequence, get an accounting degree, get a CPA, and then go into finance and do the more on the finance side. What's great about the combination is the accounting allows you to derive, how the numbers are derived and all the details within the numbers, and a finance person is really geared to what to do with those numbers. So when you marry the two together, you get a good combination of being able to know to bring it to a certain point and then take it from there. Numbers should drive your business, not any other way.
Yeah, that is a lot of times the disconnect whenever you're dealing with practitioners. Sometimes when you're trying to deal with multiple different practitioners, it's like a game of telephone. You say one thing in one ear, and by the time it gets to the second and the third person, it's completely different. And a lot of times that's where the disconnect is when it comes to tax strategy. Yes, the CPA knows all the accounting principles and can record everything, and very important. You need that CPA, but sometimes in order to implement effective tax strategies, you need extra licenses. Is that what you've discovered?
Well, that's absolutely true. I mean, you may not need the extra license, but you certainly need the extra expertise. In terms of tax strategy, I think people assume that every accountant does nothing but tax. At least that's kind of how they approach me. But I do, a lot more than tax. But not every accountant, everyone who does tax is a tax expert. They can do a return that's filling out a form. It's asking the right questions and determining, the right taxable income. But that's not tax planning. It's not. There's a lot more to it than just. And most people are not trained for that type of, advice.
Yeah, and what you just talked about, you said you may not need the license, but you would need the extra expertise. How do you vet these additional experts that you bring into the fold? Because I know as a CPA and as somebody that's a chartered financial analyst, when you're talking to your customers, you're almost the voice of God, right? How do you vet the people that you work with, and when you decide who to refer to them?
Well, to be completely honest, with most of the tax planning I do myself. I can't farm that out. I can bring it to a certain point. I can have people get the slideshows already, the presentation that I give to my customer. But at the end of the day, I'm the one that needs to actually look. It's complicated to the level where not just anybody can look at it. You're looking at the entities they have, the states they're in, where they're doing their business, what type of business they're doing, and the different advantages can go on. By the way, I'm just going to give a quick disclaimer in saying that should I espouse any advice or anything from a tax or legal standpoint, you should consult with your own professional before making any decisions.
Oh, yeah. This is information, not advice. This is information, not advice. It was so important. I said it twice. Now, I know legal tax strategies can save people in taxes, and it can defer taxes. A lot of people use these words interchangeably. What's the difference?
The difference is defer means you're not going to pay taxes on it today, but you will in the future. That's most tax strategies are going to focus on that. They're very good. I'd rather pay tax when I'm 80 years old than right now. That's and it allows money to grow. There is also ways, of course, that you're not going to pay tax. A good example, very real classic, is tax exempt bonds. If you buy tax-free bonds, you're not going to ever pay interest on that. So I never pay tax on that. So that would be the difference. Whereas you go into, say, a 401k plan, that's deferred, depending on assuming it's not a Roth 401k. So if you do a regular 401k, what's going to happen is you'll accumulate money. You'll be able to deduct it this year off your taxes. That principal and interest that you accumulate in the future when you take it out will be taxed. Say you go into a Roth IRA instead, you're putting in money, you're not getting a deduction right now today, but it'll never be taxed in the future.
So in your opinion, based off your experience, in general, what should people choose? A traditional 401k or a Roth 401k?
It all depends on the circumstances, but usually I recommend the Roth as your first go-to. That would be, you are going to pay the taxes up front. If you're in a very high income tax bracket right now, you might consider not doing that if you're going to be in a very low tax bracket when you retire. But for the most part, it'll allow extra money, that money to all grow tax-free. So let's say, especially your age, that makes a big difference. Let's say you're 20 years old, you put $10,000 into a Roth IRA. That could grow potentially to over $1 million by the time you retire. If you get some good investments there, you won't pay tax on that. But you will pay tax on the $10,000 when you're 20 years old. Not a big deal. Write the check out. The $2,000 you might pay on that, if that, then is not worth the $300,000 that you're going to pay in the future.
Oh yeah, one of my favorite sayings is all truths are parallel. And if you were to go to a farmer and ask the farmer, would he rather pay taxes on what it cost him to buy a handful of seeds, or would he rather pay taxes on what he would make from selling a field full of crops from those seeds? He would typically choose the seeds. And like you said, it's one of those things to where if you're going to have a lower tax rate in retirement, but who knows what is going to be the rules in the future. It's the difference between a bird in the hand and a bird and two in the bush. And I know another benefit of that Roth money is it won't be added to your provisional income, and it won't adversely affect your Social Security and your Medicare placements. Whereas if you're pulling it out that traditional 401k, it could.
Correct. Yes. Whereas the quick example of one where it might be the opposite. Let's say you're going to retire next year. It makes no sense to do a Roth IRA. You would want to get the deduction. You'll retire, not have as much income next year, and start paying it later. So that would be an example of the reverse.
Oh yeah, what they say is multiple ways to skin a cat, right?
Yeah, and the tax says there's multiple ways, and then there's always an exception to it.
Always an exception to the rule. Now, like I told you, a lot of my audience are business owners, are aspiring business owners, and one of the things that I like to share, and a lot of people either agree or disagree, but the tax code was created for business owners. The business owners seem to get the best benefit. How does a business owner know whether or not they're using the right entity structure to benefit from these benefits?
It's a good question. It requires professional advice, but really your choices are, in general, a C Corp, an S Corp, a partnership, or a Schedule C, a single member LLC. Depends. If you have partners, you're not a single member LLC, and that rules that out. That would go on your Schedule C on your tax return. It's very simple. Doesn't have its own tax return, and you basically have your income and whatever your deductions are, and you come down to your net income. You'll pay self-employment tax on a profit, or you'll be able to deduct the loss. More sophisticated, if you have partners, you would have either a partnership, a 1065 is what you file, and you receive a K-1. An S Corp, you also receive a K-1, but there are different things. There's an advantage to an S Corp. It's not perfect for every situation, but as I say, it's usually the right answer. With an S Corp, you would pay yourself a salary, you'll pay Social Security on that salary, but you can take distributions as well. And on those distributions, you're not paying FICA tax. Whereas in a partnership, a 1065, you will pay FICA tax on all your distributions. So that is one of the main advantages. Now, C Corp is an entirely different beast. You become an employee of the corporation. It does not flow through to you. It has its own tax that you pay. And then when you take distributions, you pay tax again. So usually a C Corp is not the answer, but sometimes in some instances it can be. Depends on what you're looking to do, what your future is, how fast and how big the business is going to be. So all these are the considerations you want to look at. But as I say, usually if you are starting a business, definitely at least look and ask your advisor about, should I be an S Corp? That's your first question.
Oh yeah, that S Corp is a very beautiful thing. It allows you to separate your active income from your passive income. And like you said, what they've determined is making money doesn't need Social Security. Making money doesn't need Medicare, and therefore you're not going to get charged that additional self-employment tax on top of that income tax. So yeah, it allows you to separate those things, and because a lot of people, you are the original investor in your company, right? So why not get the benefit of the tax treatment of an investor as opposed to having all of that considered a part of your salary? And it sounds like what you do is you help people determine whether or not that S Corp is right, whether or not that C Corp is right, whether or not they should just stay a sole proprietor. But I imagine just being a sole proprietor with no entity is rarely the answer.
That's what you want to do. You always want to incorporate. There's legal protections with that, and there's a whole host of reasons. If you get sued as if you work on your own name, you're going to court. I'd rather go. Yes, you're still going to go to court if you get sued, but you're doing it under your company. So I'd rather have the company in front of me as protection, and that's really what the legal protection you get on the side of having a company. One of the things, though, if you can still incorporate and be a single member LLC, meaning you still have the same exact thing you do if you hadn't incorporated, it goes on your personal tax return. The couple of considerations when an S Corp is not the right answer, by the way, I just want to give that out as well, is when you're only doing a little bit of income, because there's extra administrative work, there's a tax return you have to file, and it may not be worth it. And the other thing is, if you have this as a side gig, because, and I won't get too into the detail, but you could wind up double paying your FICA tax because you're going to pay it as an employer and on the self-employment, and you won't get that part of the self-employment back. So as an S Corp, on your salary, you may wind up overpaying your tax as an S Corp as opposed to keeping it as a single member LLC.
I like your style, Douglas, because a lot of people, they just say what they believe it should be, but you say what you believe is appropriate in most situations, but you always provide a potential alternative for an extenuating circumstance. Is that something that you've always done, or something that you had to learn over time?
That's the tax code. I mean, that's just the way it is. If you read the tax code, you're going to come to, I would never say it's straightforward, but I would say if you do generally figure out what they're talking about, that's wonderful. And then all of a sudden there's addendums and other things. And if it's a Tuesday and, and this happens, then you get an extra exemption, but not for this. It's amazing. If your income is over a certain level, you don't have this deduction, but if things phase out, there's all kinds of exceptions to every rule, and it applies differently. It depends on how you're filing. Married filing jointly, single, head of household. All of those have different levels that are baked into the tax code. All 29,000 pages of it. So.
Wow. Oh yeah, a lot of pages. and I know I recently heard something when it came to financial statements. They said financial statements are like a bikini. What it shows you is very interesting, but what it conceals is vital. What's your understanding of financial statements?
Well, it's interesting because the number one and first question I get whenever I show a client a financial statement, it's usually is, what am I looking at? That's usually the very first question. And the question really is, if you're an entrepreneur and you have a small business, I'm going to tell you the right question to ask. The right question is, what is my operating cash flow? And to me, that's the most important number on your financial statement. And probably, I'm not going to say definitely, but probably your accountant doesn't even have that paperwork in front of you. There's three things you're going to get, or you should when you sit down with your accountant. One is your profit and loss statement. Guarantee you they have that. That's definitely going to be there. The next one is the balance sheet, which they may or may not have generated. If you're hiding stuff, it's always on the balance sheet. P&L doesn't hide stuff, the balance sheet does. It could sit there for years. Whenever I get a new client, the first thing I do is I go through the balance sheet and find all the past history, all the skeletons in the closet are in that balance sheet. It is amazing what falls out of that. And then you have to sort through and figure out what to do with it. What's the proper thing? You have to look at how it was recorded on previous tax returns. Potentially, they have to amend returns. If it's relatively small, there are things that we can do to properly treat that. But the most important statement usually isn't included in any financial package you see. And I challenge you, go to your accountant and ask him to see your financials. See if you get a P&L. Balance sheet, I give him a big plus for that. But the real one is the statement of cash flows. That's your one that's the most important you want to look at. What your operating cash flow does is it says your business, there's three parts to it, but the most important part is the first part, your operating cash flow. And what that is of all the money that came in, how much was generated by your business? We get rid of things that really don't matter. Your depreciation on something, and these other items that aren't necessarily vital to your business. I want to know what cash your business generates. If that number is negative for too long, you will go out of business. There is no company in the world that can survive 100 years, maybe I'm wrong, but 100 years with a negative cash flow, negative operating cash flow. It has to eventually become positive. The only other way to keep that is you have to finance or get equity into the company. But that is a vital number. And small companies probably are not financing all that much, probably not doing a lot of equity. That operating cash flow is basically what comes out. And that statement is going to show you where did the money go. And so you might make a lot of money, but maybe your accounts receivable is building way up. And that's a problem because you may never see that money. You may not get paid. That's going to be reflected on your operating cash flow.
So how can business owners use this P&L statement, this balance sheet, this statement of cash flows? How can they use these documents to maximize their profitability?
Well, that's a great question because your operating cash flow is going to tell you really where your spending is. You may make a profit. It depends on how you made it, but it may not reflect how much money you have to spend. So that's going to tell you, what you're planning, what your future can be, and really the P&L is your first half. Like I said, accounting is your half. Your finance is your other side. The accounting is how your numbers are being derived. The really important thing is what you're going to do with them, and that's where budgets come in. One of the most important things entrepreneurs can do is a budget. It sounds a little arduous. People never do them, to be quite frank. But it's a really, really important exercise to go through. Plans out, maybe you could do a loose one. It doesn't have to be terribly, terribly detailed. But the more detailed you get, the better. And it's really not about the numbers. You're going to put numbers in, but it's about thinking about your business and what you want to do in the future. Maybe you want to expand. Okay, how are you going to do that? Your budget should reflect that. I'm going to need X dollars to buy another warehouse and put more materials in that warehouse. Need $50,000 to do that. Where's that $50,000 going to come from? This is what you do in a budget process. And there are a ton of questions you really want to ask yourself. The numbers are almost secondary to the process that you're going to go through when you put a budget together. And that's how you drive your business forward. But you base that budget on your profit and loss statements and your balance sheet and your operating cash flow that you just saw from the previous year. If you do nothing different, everything will stay the same. So I tell people, if you're not going to change anything in your business, we'll take last year, we'll duplicate it for this year. Nothing changes, that's what's going to happen. Well, I might lose a customer, I might gain 3 customers, let's factor that in. Now your business is changing. One of my favorite questions to ask is, what are you going to do different next quarter that you didn't do this quarter?
And that is a real good question. And then it allows you to break it down into small bite-sized pieces. And you've been doing this for a long time, and you're very knowledgeable. And it might be, people might be hard pressed to try to get close to your knowledge and skill level by reading a book. But let's say somebody wanted to touch the hem of your garment when it comes to your knowledge and abilities. What are some books that they could read?
To be honest with you, that's a question I'm not really sure I can answer. I haven't gotten my own knowledge out of books, when I was a lot younger, I've read some books, How to Buy Stocks and other stuff like that. But in terms of investment, I mean, there's some good ones out there. There's good ones on real estate investing and different things. What I would recommend, it may not even be a book, but it could be Google searches that you do. But learn what the different options are out there. Do your research. Look at ChatGPT and the like and all those things. Some people hate it, but it actually is a really good resource. You can ask it questions, open-ended questions, and it's not so much to get to a paint by numbers instruction. Is to give you ideas. There's things that'll come out of that you may not have thought of before. And you can also chat GPT, what are good books I can read about running a construction business, about opening a restaurant, about managing my personal finances while running a business. Because now you actually have two sets of books you're working on. You got your business, you've got your personal side. You have to live. You need food, money, and everything else. Your business has to run. You really have two sets of financials you're working on. So these are the kind of things. The more knowledge you have, the more you can read, the more you can take in is good. My favorites are newsletters, particularly tax newsletters. I can be seen. I have a long driveway. I go down my driveway. I get the mail, and if it's a tax newsletter, I usually have it open by the mail because I can't wait to start reading it. It's really sick, but that's what I do. I find this stuff fascinating, and it's reading and learning as much as I can. And you should, when you're in your own business, learn everything you can about your own industry.
Oh yeah, the more you know, the more you know, the more you don't know. But you have to keep going at it, right? Because it may seem like a never-ending hole, and it is. But there's tree in the hole in the ground, and the green grass grows all around. Like, you just got to keep going at it and applying as much knowledge as you can. What is your definition of success?
We have a motto here at the company. Our mission statement is to put out a product or service that the world needs. Your office should be a second home to your employees, and if you do the first two right, the profit will come.
That's a good definition. Is there a question that I did not ask you that I should have?
No, I don't. I don't really think so. There's a lot of things that you can do to make to make a business grow and be successful. I think one of the things, to give you one last piece of advice, if I will, is be friendly with your competitors, because you can learn a lot from them, and believe it or not, even though you compete sometimes for the same business, and usually you don't, but even if you might, you can help each other in ways. I'm friendly with a lot of other CPA firms, even ones that specialize in the same area that I do. And I'll tell you, I've had two instances in the last 8 years where those companies sold to me. They were looking for someone to buy. They knew me. We worked it out, and they sold me their practices. So, this is something. If something happens to me, there are businesses that could step in and buy my practice. So, this is, like I say, know your competitors, learn from them. Learn as much as you can, make as many connections as you can.
Man, I really like the way you think, Douglas. I want to thank you so much for coming on the podcast. One last time, please let everybody know who you are, what do you do, and how they can get in touch.
Okay, that's great. It's Doug Carpenter. We do accounting, bookkeeping, and tax. We do some other things too, but that's our prime focus. Our focus is to save you money on tax, not just do your return. We can be reached at www.solutionsbychs.com. That's a big mouthful, so let me break it down. It's solutions with an S by BYCHS, charliehenrysamuel.com. Our phone number is 718-412-2570. Love to hear from you. Thank you.
Man, that was amazing. And this has been another top tier episode of the Entreprenudist Podcast, a place to hear real entrepreneurs and business owners bear it all. I'm your host, life strategist, and retirement planner, Randolph Love III. And until next time, don't play with it, stay with it until you make pay with it. This is the Entreprenudist Podcast, signing off.
Yeah.